Hello guys and welcome back. This is the Complete Trader. In this video I'm going to be showing you guys exactly how you can easily spot the trend on any chart on any time frame using two simple techniques, guys. Two simple rules. So what you can see right here on the boss, that gives you two simple rules. Number one, you're looking for a failure swing, and number two, you're looking for a break market structure. So in case you don't know what a failure swing is or a break of market structure is, so let's say you're a newbie, don't worry. As we go, we will explain that. So I'm not going to make this super long, so we're just going to go right over it very fast, okay? And so we can actually start from anywhere, okay? So you've always heard that the trend is your friend. You always want to trend in line with the trend, but the problem with that a lot of people encounter is that when they face a chart, and sometimes the trend can be very messy and they don't know where to trade. So I'm going to be giving you those two um, tips right here on how you can easily spot the trend on any chart and you know follow the trend quite easily. Now sometimes the techniques will fail because price is not, the actions of price is not really that constant. There are times when price will go into sideways movement and all of that, but overall, guys, in the long term, this is the most consistent pattern for picking out the trend on any given market and on any time frame. Okay, so let's dive right into it, guys. So we can start from anywhere. So we can see that price has been in an uptrend here. We've been having higher highs and higher lows. So that's the uptrend pattern. Okay, so all right, let's just begin from here. So right in here, we had a situation where the market had a low here, and then we had a high. So we had a high, okay. All right, so we had the high, and then we had this low. Okay, so we're starting from here. All right, so we have this high and we have this low. So um, now when this high is broken right around here, when price breaks through that high and close above that high, that gives you a break of market structure. Okay, so when that high was broken, that gives you a break of market structure. So now you have the first rule. You have one of the two rules playing out here. So a break of market structure, right? Now, right here again, you have market retrace back. So this is where you're going to be looking for your trade. All right, so this is where you're going to be looking for your trade. So as market retraces back within this range from this low to the high, okay, you're looking to pick your trade anywhere in between. Okay, and so you could use different techniques for entry. You could use your old highs, support or resistance don't support, that idea. You can use supply and demand. You can use auto block techniques. You can use Fibonacci's. You can use moving average, retest, and any of those ideas, guys. So but mainly, how do you pick up the trend? You wait to see a break of market structure. Okay, so you always want to trade in line with the break of market structure. So your supporting idea is going to be the failure swing. So the failure swing is what you have right here. Okay, so just make it like this. Okay, so that is the failure swing. Now why do we call it the failure swing? It is a failure swing because it failed to go below this low. All right, so you have to think of it this way, guys. The market is showing you where the strongest order flow is. Why? Because you have this market breaking through this high that was initially set. This high was set initially, and then this low was set. Then the market did break through the high, so we violated this high, but we were expecting this low. In other words, there was stronger order flow coming from the downside, and that is actually from the buy side of the market. And so we understand that the most profitable direction or the most likely direction that the market should go after breaking through this high will be to the upside. But you're not just going to take a trade after we break through the upside. You will need to wait for the retracement because, as you know, the market moves. Um, you know, it has two legs. You have impulse leg, and you're going to be having your corrective legs. Okay, So the market did make correction, and then this is where you're going to be looking to take a trade, like I said earlier. So um, next up, you had this high. Okay, so watch out for the reversal, guys. Now we have this low to that high, not this low, because this low, guys, is this very candle that also set this high. So it doesn't make any sense to use that as a swing low. So that wasn't actually anything to be used as a swing low. Okay, so we have this low. Now that's the low you're going to be looking for to be broken. Okay, which the market does right here. All right, so this is your significant swing low that has to be broken. Why is it a significant swing low? It was the last low that set a higher high. Okay, and so the market did break through that right here. Okay, and before it did, I want you to notice what it did right here. So we had a failure swing right here as well. Okay, so this is one of those beautiful things about market structure. um, you need to understand that when you have a failure swing like this, it is telling you that something is going on. So we were in an uptrend, and so we should be expecting the market to continue going higher, right? So we could have seen this as a retracement, right? So this could have been a retracement, and then the market could have continued higher. But in an attempt to continue higher, it failed. So it failed in the attempt to continue higher. So that's why we call that a failure swing, and that becomes very meaningful um, since it led to a break of market structure for reversal. So market structure breaks after we had this failure swing, and so that could have already given you a clue that the market is already reversing, right? So after the break of structure, we want to be trading in line with the trend of the with in line with the break of structure, and so that tells you the direction of the trend. So we have a failure swing right there already, and we have a break of structure. Now, see if that is not enough. We also have, so market did retrace, and this is what it gives you right here. Okay, so now you have another failure swing. So this is a failure swing because it fails to go past this high ultimately. So it fails to go past the high after the break of market structure. So we know that we want to be trading in line with the trend, right? And so we want to be selling in this market. All right, so right here again, I need you to watch this out. We did break this low. Okay, now the moment price broke through that low and closed below that low, what you want to be focusing on is to trade in line with the break of market structure. So you are looking for when the market will retrace back within this high and this low. Okay, because that will be your current range to look for. And so within this high and this low, you have this what traders some traders will call support, and so that low should be support and turn resistance, right? So they're expecting that point to be resistance, but then you also have another block right there, or for other traders they may be looking for Fibonacci levels and all of that. So we'll talk about that in some other videos. Okay, so but you want to be trading in line with the market, with a break of market structure. So this retracement should give you um, something. So market did retrace, and you have it stuck right there. So that is another failure swing, right? And so on and on and on and on, guys. So you can see how the market did continue. So that is your simple technique for finding the trend of the market. So after this break of structure, you are anticipating the market to come back within this range so that you can get an entry, right? So you're looking for a failure swing to be created, and then for the trend to continue, which it did right here. And as that happened, gives you another opportunity to, after the break of structure here, you are now waiting for the market to come back again to give you a retracement, and so you can see how the market did continue down. Okay, so that is exactly, guys, how you trade, how you find the trend on any chart on any time frame in any market. Okay, so using the failure swing and the break of market structure. So remember this always: you want to trade in line with the break in market structure. That is the direction you want to trade in. And so what you're going to be doing is to anticipate the failure swing, where it is going to end, using your, the various techniques, or whatever technique you're using. Maybe a support, resistance, Fibonacci levels, order blocks, or you know supply and demand concepts, or whatever you're using. Okay, so that is it, guys. So that is it for this video. I'll see you some other time, guys. So cheers and God bless you.